focus on serving the individual investor. Chris Markowski is editor of an investor advocate newsletter as well as host of his own radio show, now in his 9th year.
Author, investment banker, consumer advocate, and all-round troublemaker. His history on Wall Street, well, it reads like a novel with suspense, intrigue, and corruption. He's known as the Watchdog on Wall Street. Please welcome Chris Markowski.
Pleasure. Thank you so much for having me as
Chris,
well.
You know, it's a very opportune time to have you on the money train today because with everything going on between Wall Street and the government and the election, this is something you've been keeping a close eye on for 15 plus years, and now it seems to have gotten to everybody in America. What's your take on the situation as it stands right now?
What did the Who say? Meet the new boss, same as the old boss? There's some lyric in that song somewhere. Right. It's the same thing over and over and over again in many different ways. I'm here to alert everybody. The world doesn't end. This time is no different than the last time. Remember back around 1999 when we were told that because they programmed the computers the wrong way that everybody's going to go buy tuna fish and the planes are going to fall out of the sky and everything bad is going to happen. And then, of course, September 11th, which was a national tragedy. We were struck at our financial center. Stock markets crashed. Precipitously, markets are shut down. Right. The interesting thing about America is we always seem to come back. No matter what hole we manage to put ourselves into, we seem to kind of rally together as a country and we end up pulling ourselves out of that hole. I'm a student of history, and if I'm not mistaken, this looks like a lot like the Great Depression. But I'm sure there's all kind of lessons that we learned from then. What can we learn as small-time investors? Well, there's some parallels to the Great Depression, but there's also big differences. The world back in the 1920s and 30s is much different than the world today. I mean, it's different than the world 20 years ago, 30 years ago. I mean, remember when we were kids, we were hiding underneath our desks because of bomb shelters. Now
that wasn't a good idea, was it?
Well, it's a different world today. Everybody's doing business with one another. And one of the reasons why we got into a Great Depression is because we put up trade barriers and tariffs, which stopped us from trading around the globe. We do that, then all bets are off. We can get into a really serious type of a situation or a hole. Very different today in regards to the amount of foreclosures that we have in comparison to then. The markets are much, much different, much more resilient today with many more players involved and are able to come back. And right now I think the government's taking some pretty good steps at alleviating the problems. They should have done this. They should have been ahead of the curve much, much earlier. There would have been some much better free market alternatives in regards to targeted tax cuts, raising the FDIC insurance limit, which has been the same since 1980. They could have done that a long time ago. They could have at least indexed it with inflation, done something like that. And they saw it. They knew Fannie and Freddie was a disaster waiting to happen. They had hearings on it. They talked about it. But the one thing about Wall Street is, it's interesting, going back to the old college days, nobody likes to take away the keg at the keg party. When something is going really well, whether it be the dot-com fiasco or whatever it may be, we're not paying attention. Why? Well, politicians make a lot of money off the taxes from New York, and they like the same thing.
For you, in this day and age when most people seem to be predetermined that they're going to be doom and gloom in the forecast, give us something that we could look forward to in the coming months. Please, Chris.
No, you always need to be a control. Well, take a look at what Warren Buffett did. And he's stepping in, he's buying huge pieces of Constellation Energy, buying huge pieces of General Electric, Goldman Sachs. Well, he's getting really good rates. He's almost acting like Tony Soprano, the type of rates he's getting, plus the 10% he's getting on his money. We're not going to get that type of a deal. But in order to be truly successful as an investor, you have to understand, buy low, sell high. It's a cliche. But if you're dollar cost averaging, and you have a 401k, and you're putting money in on a regular basis, and you've got a lot of time, and you're young, you've got a lot of time, keep investing, keep putting money away. Okay,
so you have it right from the Watchdog's mouth himself, Chris Markowski. Chris, I want to thank you so very much for joining us today.
It's a pleasure. Thank you.
And you guys, we'll be right back.
Stay with us on The Money Train.